workspace provider Office Space Solutions recently entered into a business transfer agreement with SMS Integrated Facility to sell their facility management division. With this, Office will raise close to about 27.5 crore rupees. To talk more about this, we have with us Amit Ramani, the CMD of the company. Thank you very much, Amit, for joining in. So first, if you could tell us, what is the rationale for the divestment? What was the revenue contribution from your facility management business? And will you be looking at any more divestments in any of your assets?
So thank you so much for having me on. Clearly, I think to give you a little bit of background, we started this business about 3 years ago as a result of supporting the blue collar staff who at that point was outsourced to third-party vendors and during COVID were not being supported. So we started this with almost no investment, and I think shows the capability of the management team to scale it up to 3,000 people in about 3 years, and now we are divesting it. Clearly, I think the rationale behind it was this is not part of our core service. Clearly, this allows us to free up liquidity to invest in higher growth areas and focus on making sure that we continue to make our market leadership in our flexible workplace solution area that we focus on. Now, clearly, this is cash flow accretive, and it improves the office working capital cycle. It also provides the liquidity and is obviously helping improve the ROCE as well. And it allows us to invest this in areas which are much more higher growth and giving higher returns to our stakeholders.
Got it. All right. Hi, Amit. Good morning and good to see you in. The other piece of news is that Awfis has partnered with Nyati Group for additional 3 lakh square feet of grade A workspace. We want to understand a few factors on that front. What is the revenue potential of this office space lease that you're going to do? The time period, and are the rentals higher here versus, say, a comparative number in Q1 that you normally see?
So, Nigel, this is a managed aggregation deal, which we've spoken about, where we partner with the landlord, with the largest one that we have done till date. This translates to close to about roughly 7,500 to 8,000 seats for us in a single asset. So clearly one of the largest ones we have done. Average seat realization is about 8,000 rupees in that micro market. So it gives us a huge revenue potential from that asset. Clearly, as you asked about the rentals, clearly the commercial real estate markets are doing extremely well. So realizations in almost I would say every micro market have gone up. Clearly, as the base rentals in all of the commercial markets have gone up. So we see a very, very positive outlook for FY25 and beyond for flex as well as commercial real estate.
Got that. So, I mean, in terms of specifics, would you be able to put any numbers to it? What is the potential? You said 8,000 seats, right?
Yeah,
approximately.
It's almost about, I would say 7 odd crores monthly, which would translate into almost close to about 90 plus crores on a yearly basis in terms of revenue potential.
Sorry, yearly, what is the potential you said?
90 plus crores, 90 crores.
90?
7 crores monthly, 90. Yeah.
Okay. And in terms of sort of margins on this, typically, how should we look at it?
So if you look at our overall margin when we do these managed aggregation deals at a blended level, we are translating to about close to about 20 to 24 to 25%. This would be somewhere in that similar range.
And managed aggregate deal means you basically you're renting the space. You're renting the space long term. Sort of you rent from a landlord and then you sort of build it out, fit it out, right?
No. So in this case, Nyati is our partner. This is a profit share deal. And as in our managed aggregation portfolio, essentially Nyati Group will be investing about 75% of the capital for the asset, and we would be investing about 25%. And post covering the operating expense, we would share in a 70-30 split at a profit share level.
Okay, 30 in your favor.
That 30 in our favor.
Okay, all right. We'll leave it there. We have more questions, but lack of time this morning. Amit, good luck and thank you for joining us. Stock's done very, very well, and we'll have Amit Ramani back with us to talk